Now let's talk about hot times for trading and why. Okay, in the Insider Code Kit, you'll often hear Mac talking about the sweet spot. Part of the reason for such huge transactions, particularly at the open of the markets, is that a lot of the banks have to fill huge orders from their commercial clients. This will generate movement in the market, and in the process, the bank will try and make a profit. Now let me explain what I mean by that. Let's say you have a client like Mercedes-Benz who may want to convert their funds from their foreign sales into their domestic currency. Then they contact their bank to do so. From there, the bank has to fill that order based upon the needs of their commercial client. They have to do that. That's why you'll see huge moves that tend to happen around the same time every day, because banks are trying to get those orders filled. In the process, they will try and make a profit. So if Mercedes-Benz wants to convert like 50 million US dollars into euros, then the banks will try to basically build a position to make a profit from that. So instead of just converting the funds all at once, they may try and sell the market down to get a better price, so that when the market turns, they will not only fill their customer's order, but also put some money in their pocket. This is why we want to learn the market by getting active in it. Another thing to note is that sometimes you'll have huge corporations from other countries buying up certain currency so that they can take advantage of that country's market. For example, let's say that the stock market started booming in Japan. Once other foreign companies start to see that, they'll contact their bank to convert some of their currency into the Japanese yen. Now, why is this? Because they want to take advantage of that market, and in order to do so, they need to have currency conversion to participate. This will then make a huge spike in the currency markets, not just because of a news report, but because corporations want to take advantage of potential profit in that country. So you want to look at the sweet spot hours for market trading. Now, a lot of times that you'll see these transactions happening is during the sweet spot hours. Okay, so you want to take a look at the sweet spot hours for the market you're trading. And those hours, if you don't know them already, they're around 3:30 a.m. to 11 a.m. Eastern time, Eastern Standard Time. And sometimes also you'll see some moves in between 4 p.m. to 6 p.m. Eastern Standard Time. But in between those times, in between the sweet spot times, you'll also want to look at the hours of 3:30 a.m. to 5 a.m. Eastern, and also 8 a.m. to 11 a.m. Eastern. And you'll also want to know where the volume is trading during the day. Most of the volume is traded with the major pairs. That's the euro dollar, the dollar Swissy, the pound dollar, and also the dollar yen. Well, that's it for this section. Now let's go ahead, let's move on to our next video now.